Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, February 27, 2015. You're looking at a daily chart of the SPY, but first, we're going to change things up a little bit tonight. I'm going to add a couple of other things that we'll discuss tonight because of their relevancy to the overall markets. And what I made is a short list of things we're going to discuss, and we're going to stick to this agenda, and then we'll give it a wrap, and everybody can go about their weekend. Okay, so first off, daily chart of the SPY, and what I thought was interesting today, just right off the bat, it looks like maybe we closed below yesterday's low, which would be important if we did. So first we go over what was yesterday's low. 210.65. Today's close, 210.66. Listen, folks, if anybody thinks that's an accident or a coincidence, it's not. Okay? They closed the SPY 1 penny above yesterday's low on purpose, just to give that little sense of, what's the market going to do on Monday and Tuesday and such. So, it's interesting. I mean, it looks like we're kind of going through a little bit of distribution here, and you know that we should see some downside, but as long as we stay above this day here, the low of this day, which is 208.73, then the market will still remain in a bullish position as far as the SPY is concerned. But I also want to discuss the E-Mini contract, because some interesting stuff goes on in the middle of the day today. And so what I'm going to do is I'm going to go over to the hourly chart. And what we're going to find when we can get there is, remember the all-important number of 2108, okay? So let's find 2108. Here we go. 2108. They're my crossbars on 2108, right across here, okay? So this is the 26th. This is yesterday, okay? We break 2108, fight back, come above, break it again, fight back, close above, below, okay? And then we fight back, okay? And then finally today, okay, we hover. Look where the closes were today, okay? First candle, the 11 o'clock close was 2110 and a quarter. Then the close is 2109. Then the close is 2108.75. 2107.75. We closed below 2108 on an hourly basis. Next candle, 2104. You see as soon as we closed below, okay, 2107.75, okay, the moment we close below, okay, the market comes down, and then we were never able to recapture it in the late afternoon session. So that shows you that, at least it shows me that number that I've been identifying all week long had a significant amount of importance, and it comes right here, okay, from the 20th, okay, from last week. Okay, that number we get from last week, and look what happens all week long. And we finally broke below, and we stayed below it at the end of the day. And that leaves open to question what happens on Monday with the S&P or S&P E-Mini, right? What happens with the S&P on Monday since we closed below that number? Okay, should we be going down and testing lower numbers? Well, I gave you a lower number earlier in the week, but that no longer applied because the market changed complexity throughout the week. But the 2108 still applies, but the downward target is off the table, and we have to see how next week shapes up, and we'll take our first assessment on Monday. But right now, the market's going to be in a bullish position over 2102. Let's say that, at least beginning Monday. I think we'll hover around or try to get to 2106, 2108, 2106, 2107, 2108 on Monday. We'll have to see how the day unfolds. It's too tough to make a call because my expectations for next week is, did we put in a weekly top this week, or are we going to blow through the weekly top? When you go back to the daily chart, okay, and you look and you see, well, are we just consolidating sideways for another move higher, or are we going to roll over a little bit and get a few weeks of downward pressure? We're still on the precipice, and it's too early to tell which direction it's going to go, and as such, we always let the market tell us what to do. We don't impose our will on the market. Therefore, it hasn't really told me anything clear and concise yet, but we're getting closer. Okay. I wanted to show you a quick trade example also, real quick. This is an interesting one because if you remember, well, let me go back to the daily real quick. This is the S&P E-Mini, but what I want to do is I want to show you the low from yesterday, okay, was 2101.50. Okay, this is the S&P E-Mini, 2101.50. Okay, now let's go back to the intraday chart. Okay, so we're coming along, and if you happen to be an intraday trader or trade the markets actively, and you're sitting around and you see something like this unfolding where yesterday's low was quite a ways away from where we spent the majority of the morning, okay, up here, and the majority of the middle part of the day. And what happened was, since we were far away from that number, 2101.50, okay, which was yesterday's low, and we started to come down with some kind of volume compared to the rest of the day, a little bit of velocity, okay? And what happened is we went right into that number. Well, we went to 2100.75, so we pierced yesterday's low by a touch, and then it provided a good level of support, at least for the time being. And what did we do? As soon as we hit it, we rallied up, and we really never looked back from that point forward, and the market finished at 2104.50, pardon me, 2104.50, okay, quite a ways away. So if you were able to scalp that level, if you're a scalping type of trader, and you were able to scalp that level, you'd be in the money somewhere in the neighborhood of 4 points, 3.5 points maybe, or more with a stop in the money or a trailing stop going. And those are winning trades because it was yesterday's low, and there was a high probability that the market will bounce at yesterday's low when coming from a much higher point. If we hovered around that low for 3 or 4 hours today, it wouldn't be the same trade. It's because we came into it with higher volume, higher velocity from a higher number, and therefore it was providing a good level of support. Remember, there's always going to be a level where buyers come in. It's up to us as traders to identify the best level, the best next level that gives us the highest probability trade. And that's what it was. So I thought I'd give you that little tidbit today. Let's jump over to Apple. And let's take a look at the Apple chart on a daily basis, okay? And there's a reason why I want to bring this up is because, while the S&P is basically hovering around, let's go back to let's just get the shape of the chart, okay? We rolled over a little bit, but not much. I mean, we're not really off the highs, but just pennies. I mean, the high is 212.24. We closed today 210.66. Less than $2 from the highs, all-time highs in the S&P. That would be like basically 15 points on the S&P. Okay, so let's go back over to Apple. All right, and what I thought was interesting was we made a high earlier in the week at 133.60, and we closed the day today at 128.46, off about $5 from that high, and we were down even another $2 yesterday, more dollars from where we are now. And I just think that's somewhat significant. It looks to me like Apple, being that we couldn't stay inside this green candle here, it looks to be that maybe Apple's getting a little tired, needs to pull back, overbought condition. I mean, let's look at a longer time frame. I mean, that's a big move. We're getting extended. We're a little bit far from home. We like to get close to home in these markets. And, as we get the 20-period moving average, or the red upsloping trend line, is home base. And then we were getting a little far extended from home. This is the weekly chart now. This candle here this week could be viewed, could be an argument, could be made that it's a topping signal, somewhat of it's not a doji, but it's somewhat of a topping signal. It's hard to tell. We have to see what next week brings. I mean, you could see some more downward pressure, but, there's a buy level in here. It's not a short. You don't short Apple. You don't short the strongest stock in the NASDAQ, pulling the NASDAQ up to 5,000, right? you short weak stocks. So being that we're still in a seasonally bullish period of time, longer term for the market, and I mean for the next few months, okay, you want to look to buy pullbacks in stocks like Apple because Apple's going to go up with the market. The market's going to go up with Apple, when we go on another bullish run after a pullback. So you want to be buying Apple pullbacks. Where would you buy Apple? Well, a great level is right about 120 to 118 level. Well, 120 to 118, if you could pick it up in there, you could buy a position there. Even a better level would be 106, but I don't know that we'll see 106. That would be a buy with both hands, most probably. But we'll have to see. We'll play it one day at a time. But the reason I wanted to bring up Apple is because Apple's usually a leader. So Apple led the market up. Okay, it's leading the market to 5,000, but all of a sudden stalled out. The Nasdaq's stalling out. Is Apple going to pull back another $5, $10, $15? I don't know. If it does, you can look for a pullback in the market. So that's going to be interesting, and it's going to be important to see how the market's treating Apple or Apple's treating the market next week. All right, another thing I wanted to discuss that we don't bring up all that often, but I do talk about it from time to time when it is relevant, and it's a good thing we're starting on the weekly chart. This is the VIX. And the weekly chart on the VIX is coming into, you see where all this chart support is down here? I mean, these levels down between 11 and 12 are just, a huge level of support, okay? It's going to take a lot to come a lot beneath 11 and 12 down here. The reason I want to bring this up is because we closed the day today at 1326. If we get maybe a little bit of a spike up on Monday or a spike up earlier in the week in the market, maybe the Dow's up 100 points, 150 points, S&P's up 10, 15, 20 points, something like that. We go to the highs, the 212.97 and the SPY, something like that. You may find the VIX down in the 12s. I think it would be wise to be a buyer of the VIX in the way of maybe VIX options. Okay, VIX has options, or you can play one of those ETNs, exchange traded notes, VXX, which VXX is this. I don't like these all that much. I don't want to play this. The weekly chart doesn't even make any sense because this has gone through reverse splits and things. But if you look, this is a 60-minute chart, and this could be putting in a pattern to go higher. So it's interesting, the setup that's going on here. This is a daily chart, and this could be teamed bottoming tail potentially. We'll see. We'll see how it plays out. I just think the VIX is starting to look attractive, which means if I think higher prices are headed in the VIX, that would mean lower prices in the stock market. And, we know what that story is. So we just have to let the market tell us what it's going to do. Let's go over to crude oil. I know it's getting long in the tooth. I'll try and move it along and wrap it up. Crude oil, it was interesting. Our number and our line in the sand is 49.70, 49.70. And here's almost, I'd love to call it proof, but I can't call it proof because here's 49.70, okay? Oh, you know what? I'm sorry. I want to go on the intraday chart because this is what I want to show you. Almost like, here, even better. The 60-minute chart gives a clear picture. 49.70, okay? We broke it yesterday, remember? Okay, we broke 49.70, started closing below hourly, collapsed. Came back up today, started riding underneath, started climbing up to 49.70, kind of, sort of, right? We were down here at 49.30s, 49.20s. All of a sudden, in the afternoon, the crude oil market closes at 2:30. Okay, so right before, like 15 minutes or so before the close, okay, we ran up and hit a high of 49.94 and then immediately reversed and couldn't get back above 49.70. So I'm convinced that my number's right here, 49.70. Took a run at it, wasn't going to close above it, failed. It's just some way the market tells you, yep, that number's still in there. And I know nobody could see 49.70 because we went to 49.94, but I just know it took a run at 49.70. Anyway, that's my story and I'm sticking to it. There's no doubt about it. I know my numbers are good. So anyway, what happens next week for oil? I still think there's higher prices for oil, but I'm not looking for all that much Higher, I'm just looking for a move to the top of this range. $55, something like that. 54.5, $55. If I even let it get that far, if I'm long oil, I don't even know if I'd let it get that far, but that would be a topside target. I don't know how much lower. We're at the bottom of the channel. I mean, here's your channel. Here, up to here. Okay, you see we broke kind of the lows of the channel yesterday, and then we closed above it today. That's telling you that that line's important. I didn't draw on the line. I guess I could. Why not draw on the line? It's Friday night. We have a little extra time. Draw on the line. Okay, I'll get it straight. Okay, you know, this is the bottom of the channel. Okay, we broke it yesterday and closed above it today. So, you know, it's a channel. Okay, the top of the channel is right here. Okay, and this is where I get my $55 number from. That's it. It's very simple. It's not that hard. It's not rocket science. I'm not making this stuff up. It's just these things repeat themselves. I'm giving you the benefit of me watching it for 20 years. Okay, so let's go over to gold. And gold had an interesting day, and I'm going to show you an intraday chart because we had a hat trick today. For 3 days in a row, okay, it's not showing up on this chart. I think it shows up on the 10-minute. No. Maybe it was on the daily? No? All right. Anyway, I don't know what I was looking for. I was looking for a stair-step higher. I saw it on one chart before. Let me take another look. Well, I guess this is it. So you basically have, this was what, Tuesday or something, the 24th? Okay, when was the 24th? The 24th was Tuesday. Tuesday, you rally up early in the morning, and you sell off it later in the day. Wednesday, you rally up, sell off. Okay, today, you rally up early in the morning and sell off. And it's okay. It's a stair-step higher. We're still making higher lows, and higher lows are healthy when the market changes its complexity. So here you had a low, and now we had 3 up days in a row. Maybe the market has to pause a little bit. Maybe we take a run at this 20-period moving average, but certainly 2028 to 2030 is really my next target. You know, I'm going to start to get serious about this, and if we can clear the high, okay, of 12, what did I say before? 1236.70. If we can clear 1236.70, we're in business. The number I was telling you before was 1220, 1228 to 1230. But if we can clear this number here, this high 1236.70, then we're in really, really good shape. So I think that the market's going to start to look even more bullish. And what's happening is you're going to wake up in the morning and you're going to find gold up, $15, $20, $25, even $30, and then it's off to the races. And then what's going to happen is you're going to find the gold mining stocks. And here's where we're going to talk about GDX. Okay, GDX, and I really love this chart. Let me show you what I'm looking at here. Okay, what I'm looking at is a number of things. I'm looking at low, higher low, higher low. Okay, I'm looking at even on a weekly basis, I'm looking at a bullish pattern setting up. Okay, we've gone sideways 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 weeks. 1, 2, 3, 4, 5. Yep, 6 weeks in a row we've gone sideways. This is building up some kind of momentum hopefully above the 20-period moving average, which is the 20-week moving average, which is starting to flatten out. Okay, now let's go back to the daily chart. Let me show you something else. Okay, if any of you followed or ever have followed or known about Elliott wave analysis, you'll know that there's normally a 5 waves up and 3 waves corrective pattern on the way down, or vice versa. 5 waves down, 3 waves a corrective wave up. Either way. Now watch this. 1, 2, 3, which is the longest wave, 4, and what's next? 5. Where does 5 take us? 5 could take us up into this area here, okay, 25, 26, 27, no problem. It doesn't all happen at once, okay, and it could take a couple of months to play out or more. But certainly, the GDX could get up that high, but certainly on a laydown, 24 to 25 on this move, way well within shooting distance here if we start to build up any momentum on the upside. And that brings me over to another trade, which is the trade alert that I issued the members earlier in the week. And we're just going to take a look at silver wheaton. This was the trade alert. It looks very similar to GDX. And what does that tell you? Okay, low, higher low, higher low. This is the daily chart. Elliott wave. I'm not an Elliott wave fan, but I'm just noticing that, sometimes this stuff plays out. So it's wave 1 up, 2 down, 3 up, 4 down. Where are we going? Are we in the beginning stages of a 5? Okay, the members got a trade alert at $21 earlier in the week. Okay, not a big gainer yet, 59 cents, but that's okay. A gainer's a gainer, and I think there's much higher prices ahead. Okay, let's move it along, and then we'll wrap it up. I know it's a very long video, longer than normal. But let's go to the bonds, TLT. And, once we made this high here up into the 20-period moving average on the daily chart, told you it'd probably pull back for a couple of days, but we did make a weekly bottom down here, and I think over the longer term, there's still higher prices ahead. But we'll probably have to, kind of go back and forth for a while, and the market will get some footing, build up some momentum to go higher, and we'll just take that one day at a time. But so far, so good. We hit the high. Pullback was called the other day, and there'll be another leg higher coming in the few, probably maybe latter part of this coming week, middle to latter part of this week. I would look for higher prices in the TLT. Maybe even before that. It's certainly possible before that if, in fact, the market does come under pressure, meaning the stock market. Okay, so that's about it for tonight. Hopefully it's been helpful, folks. I hope you like what we're doing here. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.